It's Market Day Report. So glad you're with us as we start another trading day. We've been up and trading this day session for about 45 minutes. What's happening with the corn market? That's where we start. And corn trying to make it 6 straight sessions higher, and can do that if we settle in positive territory. We're in the red right now, 420 on the D's. It trades down 3 1/4 cents. Soybeans trying to make it 5 in a row higher, but we're lower right now, 10.30 1/2 on the November. Penny and a quarter lower. Let's touch on soy meal. The soy meal contracts have been higher. 4 straight sessions were lower. And by the way, 4 straight sessions higher for bean oil, and those contracts are trading in the red as well. Can we find some green in wheat? Answer no. 4.99 1/2 on the D's for Chicago. It's off 5 1/4. Hard red was lower yesterday, and losses continue today. 4.85 1/4, down 4 3/4. Finally, spring wheat lower across the board. Oh, I'll throw cotton in here. There you go. It's up 28. Found one moving higher, 64.44. Chris Swift is with Swift Trading. Chris, lower across the board, really, for all of our row crops. But that's not saying a whole lot. These are not deep losses.
No, not right now. And it's sideways. We're waiting for whatever may come next. Government influence has moved the markets more than anything else, more than supply and demand. We're hoping for a greater demand aspect if we can cut some deals with China. Even if we don't, we're still swimming in beans, we're still swimming in corn. We need a tremendous amount of demand to push that through, and that probably means greater livestock production, maybe more biofuels, but something to help consume all this, because even with trade deals, it's going to absorb some, but with South America continuing to increase production in both corn and soybeans, it's going to be very difficult to try to get enough demand out there to elevate prices.
Now, rewind the clock. I know you were around when we really launched ethanol into the current state it is. I know ethanol's been around for, what, 50, 60 years or so. But the big one, when we launched that and prices took off, is there a potential of doing something similar to that, whether it's through sustainable aviation fuel, and I'm talking about the grain and oilseed markets? Is there an opportunity to have yet another big rally on the heels of something?
If it comes out, yes. But right now, I don't think there's anything cooking in the background that would lead you to believe that there's going to be a new usage for the product or anything. And it boils down, because you made a really good point. When they started the ethanol, when it became a mandate on there, fence rows were torn down that had been in existence, and they plowed grandma's pea garden. They did everything under the sun they could to raise the number of acres for corn to supply that. 2 years later, they've increased acreage by almost 18 million acres, and then what do we do with it? It plateaus. All of the brand new refineries get sold for pennies on the dollar, and then it regroups itself again, and eventually over the next 5 or 6 years becomes a viable energy source where there is some profit margin in the ethanol plants. There is some profit margin to the distillers' grains out there for our livestock producers. And then we kind of hope that the corn farmer, soybean farmer, gets some kind of relief in their prices that boosts them up a little bit.
All right, we're talking with Chris Swift, Swift Trading. We'll come back in a moment. We're picking up the conversation with livestock. Market Day Report continues in a moment. 25% year to date. That's the gain for live cattle. Where are we today? Well, live cattle futures are moving higher, 242.60 on the October. And we say that's chasing cash, and we'll talk about that in a moment. It's 75 higher. Really, the activity coming out of the December contract as it trades at 244.62, and it's up 97. This is a market that settled higher yesterday. And we were higher yesterday in November feeders. We're 52 higher on that same contract right now at 373.20. But the deferreds were all in lower territory. By the way, this is a market up 42% year to date. And then hogs were higher across the board with the D's at 82.17. It's up a dime. I mentioned chasing cash. Chris Swift is with Swift Trading. That front month contract, that October for live cattle, what does that mean when we're saying chasing cash?
Well, it would be a positive basis where the cash market is trading higher than what the futures market is. So the futures are trying to catch the cash because futures always settle to the cash market. So that's what they mean that. Of the most interest that I can see in that market is clearly the spreads between feeder cattle and fat cattle. All have gone up, but fat cattle have not gone up near as much as what feeder cattle have, and that's where your starting margin comes from. Buying the feeder steer, projecting out in the future what your input costs are going to be, and then seeing what is available for a future marketing price out there. And the spread between those two continued to widen. The feeder cattle market continued to go up dollars more than what the fat cattle market did, and that just crushed margins. And all last week, up until Thursday's closed, cattle feeders just inhaled that. They just continued to pour that in. So we're looking at really significant projected negative margins out there. The cattle market can't go down. If it goes down and people are not hedged this market, it will be disastrous. It won't be just not fun. It will be disastrous. If it stays steady, it's really not that good because, again, I need higher prices to go to it. So we have one way to go, and that's up. And if we do not go up like that, it's going to be pretty ugly for the cattle industry.
And again, just I think stepping back for those who don't understand the market, the feeders are the ones that the feedlot is actually bringing in,
yes,
right?
Yes, absolutely. They're 850 to 1,000 pounds. And what we have noticed over the last 2 years is shifts in production. Guys that used to feed from calves up to 500-600 pounds, they are all now moving in different weight classes to try to find that sweet spot, something where I don't have to feed them for a very long time, but just enough to get a few pounds on them. And with the market going up, in theory, just about every day, then it behooves them to try to move as much volume as fast as they can to get as much before it kind of maybe the party ends.
Yeah, so the cattle feeder will take them in. Those are the feeders. They'll feed them out. And as they're getting rid of them out of the feedlot, that's where our live cattle fat cattle are. So again, that between the feeder side and the live cattle, you've got to figure in the cost of feed as well.
Boy, and it's not going down. What did we just talk about corn? It's not going down. It may not be going up very fast, but it's not going down right now.
And the squeeze then really puts those feeders in a bind.
Yep.
Chris Swift is with Swift Trading, and we'll be back to dig into this a little deeper in about 20 minutes.
All right, sounds great. Thank you so much.